We want to mention 70. 70. In fact, China has a chance to break through 70% because Japan accounts for a share of the US GDP. 70 GDP. Back in the 1970s, the US started to turn downward. 70. We also saw that last year and the year before China exceeded 70 figures. 70. So China's sustained growth, if we talk about politics or economics. Or in terms of long-term economic phenomena, China was the first to break through the 1970s, 70. The second challenge is the origin of today's tech war. Of course, the US is also aware of this issue, and China wants to solve it. But the biggest difference between today's China and the United States after the 1980s 80. It's because of the biggest difference in economic structure among everyone. It's the string in the middle, the so-called issue of industry. So today, China's problem is to integrate all digitalization and the internet. Or called chip-based pharmaceutical materials, all these value-added or TFP things, TFP. Innovative and technological things are placed inside the physical body. This is actually the most opposing and different relationship we see today between China and the United States. The big ones are different. Of course, as we've discussed, this is actually the biggest difference among the lower classes. Or are the two countries at this point in time in terms of economic structure? It's the US and China 30 years ago, or China 40 years ago and today, 30-40. The underlying structure of GDP is different. GDP. This has been happening over a long period. Take China as an example. At least for the next 5 to 10 years, it was all about solving this problem, 510. Or mainly to solve this problem, by increasing so-called total factor production efficiency. Because our labor force as an element can no longer grow. The capital-driven factor can continue to grow, but its marginal effects are diminishing. So by doing our utmost to do TFP, we already have a large enough overall output. TFP. But in terms of increase rate, it's still about a dozen percentage points short. What does that mean? Although China's total output in manufacturing value added have long been the world's largest, it still exists now, and accounts for 30% of the global total, but our growth rate, 30%. We call it gross margin, which is about 11 to 14 percentage points lower than Japan, Germany, and the US, 1114. This means increasing efficiency across the entire manufacturing chain. This is why more companies like Huawei are needed. Whether it's chip companies or biomedical companies. Whether it's treatment, or even a return to the internet industry. Or industrial internet and similar things. As for timing, we originally wanted to talk about some specific directions and opportunities later. But time might not be enough, since it's already an hour. Otherwise, I'll show the host first. If we have any issues later. Let's go back and talk about the parts we didn't finish discussing. Let's invite Mr. Rob back. Alright, thank you, President Li Feng. Li Feng always spoke brilliantly, and listeners felt very confident. To seize new opportunities, companies need not only to strengthen their senior experience. The support of capital is indispensable. Our offline corporate practical camp also takes this into account for everyone. So in each issue, we invite some top experts in investment rights to share their insights. To help everyone expand their network of investment rights as entrepreneur trainees. Face-to-face communication between entrepreneurs and investors helps deepen mutual understanding. It also helps future. If you're interested, you can also follow the official WeChat public account. Video channels, pay attention to the information posted by Banban and the main character in the group. Now, let's move on to the second step. We have Dr. Wu, partner at SciTech Film Studio. Dr. Wu Qingming. He is not only the founding partner of Eju Capital but also a SciTech innovation expert at Shanghai Gaojin Financial Research Institute. Research mentor and consulting director at Jinrong Research Center. This year's experience is very rich. Then let's hand the microphone to Dr. Wu. Dr. Wu made a request. Alright, hello everyone. Good evening to all friends online. I'm in Shanghai, I'm at home, and I checked it out, it's been more than 2 months. It's been almost 3 months. Today, I'm especially happy to share our scores. Actually, the final part of the score sharing should still be very important. Because I saw it before, it would highlight some new opportunities that might arise now. A new industry for everyone to experience. I think we might leave some time to share the scores with everyone. What do I want about home matters? Mr. Lee, please turn off screen sharing. You paused just now you need to turn it off. Lee Fun Zong. Alright, then I'm the same, wanting to share some of my recent thoughts. Let me share a very short message with you. Everyone who knows me knows that I've actually invested for many years. Even more interestingly, a few days ago, at a Tongji school anniversary, I saw myself graduate from Tongji and experienced a new era of urban development. Over the course of 30 years, that score just mentioned 30. It was because there was a policy back then, which aimed to make real estate. The cancellation of the welfare housing allocation policy has led to the development of urban construction over the past 30 years. 30. Promoting urbanization. I think that over the past few decades, we have been constantly reflecting. If the previous engine was driven by real estate, where is the next engine? So whether it's innovation or our today,